Brill, and everybody can hear me all right, and everybody can see me PowerPoint, yeah? Oh, look at you all. It's lovely to have so many of you here tonight. Fantastic. Okay, then. So we're going to get started then. Anybody else that wants to jump on, they can jump on as we're going through it. So obviously we had Helena, the fantastic Helena, last night. Who started the bookkeeping week off. You've got me tonight and tomorrow night, and then you've got Eleanor again for the final one on Thursday. So these sessions are basically to give you the chance to ask any questions. So there's a chat box. I will be keeping an eye on chat box. Anything that I can't answer tonight, I will I think most of you have got my email address, but I'll give it your end anyway. Drop me an email, give us any feedback, etc. So tonight's session is basically, I want to talk to you about double entry bookkeeping. So it's going to be a bit of participation on your part for first slide or so. But when it comes to double entry bookkeeping, it's really, really important that you understand it, because as you go on with your studies, you've got to be able to take this knowledge forward. Okay, so even in real world, so for instance, I've got an accounting practice and did set of accounts a couple of weeks ago for a client who bought a new motor vehicle, but part exchange one, etc. And I always use double entry when it comes to things like that, so that I can work out whether they've made a profit on the part exchange or a loss, etc. So the double entry that you're going to learn, although you don't really see it now in real world because everything's done on computers, the knowledge that you gain from that helps you then with your career and in working world. Okay, so everything that we're teaching you and everything that you learn on AAT is really, really important for you to be able to build up that career. Okay, so these sessions are for you guys. So any questions you've got, even if I've not covered it, just ask away and I'll do my best to explain it to you on this video. So it shouldn't take too long tonight, depending on how many questions we've got, but we'll see how we go on. I'm in no rush to go anywhere. Okay then, so double entry, Eleanor might have gone through this last night. If we missed the one line, yeah, the recordings will be uploaded onto my PTA, but also if you drop us an email, I will be able to get James or Charlie to email you the one from last night or whatever. Just let me know what it is you want us to do. Okay then, so double entry bookkeeping. Now, if anybody says to me, I can remember everything about accounting, I would call them a liar, because we can't. There's too much. The Finance Act changes, the rules on payroll and this, that and other changes. So we've got to make it easy for ourselves. So these acronyms, and I bet Eleanor went through these last night, your PEARLS and dead click, to me, they are the thing that will constantly get you through these exams. Okay, so the dead click is thinking about debit, purchases, expenses, and assets. What we mean by purchases is items that you buy to resell to customers. Okay, so it's not things that you're buying to use in the company, it's stuff that you're buying to resell to customers. So if you're a mobile phone shop, for instance, it's the mobile phones, you're selling them to customers. Okay, expenses are your day-to-day expenses, rent rates, insurance, light, heat, wages, Your assets are your non-current assets and current assets. So remember, non-current assets are items that are going to last longer than a year. So things like motor vehicles, office equipment, plant and equipment, anything like that. So anything that the business uses within the business to trade, machinery, all things like that. Your current assets then are your inventory, your stock. your trade receivables. So your trade receivables are customers that you've sold goods to on credit. You've got your cash, petty cash, or till if it's a shop. You've got a bank account if it's positive bank account. Okay, so it's got to have money in it. And you've got things like prepayments, which you talk about at level 3. Okay. Then you've got your revenues, your liabilities and sales, which are a credit. So your revenues are anything that's really not trade. So things like if you receive discounts, or if you get commissions received, or if you receive any other kind of income. You might, for instance, rent out part of your office, so you get rent received. So that's classed as revenues. Then you've got your liabilities, which is money that the business owes out. So it's non-current liability or current. If it's non-current, it's going to be paid after a year. So it might be things like a long-term bank loan. If it's current, it's got to be paid within a year. So that could be things like your trade creditors. It could be HMRC, because they're not going to wait for their money. You might owe some staff some wages. They're not going to wait for their money. So it's things that have got to be paid within a year. And then you've got your sales, which is your trading sales, so your mobile phone sales, etc. So we're going to look at things like that tonight. Your dead click is exactly the same. It's just a different way of remembering it. The difference with this one is we've got drawings and capital. So remember with this one, drawings is money that the proprietor of the business takes out. So the sole trader or the partner, okay, if it's a partnership. So if you're taking money out of the business as a proprietor, it's a debit, because what you'd be doing is say you take it from bank, you credit your bank account and debit drawings, okay? And then your capital is your credit, and that is money that you're putting into the business. So it's an investment from the owner into the business, okay? So you're crediting your capital because you're saying, I'm putting this money in. So if, for instance, after you've all finished doing AAT, you want to set up a bookkeeping business, you've got to invest in it. So you're going to need a computer, you're going to need some software, you might need some stationery, etc. Okay, so that's you putting money into your business. It's investing it. So that's where the capital comes from. Okay, so is everybody okay with that? Because I'm going to test you in a minute. Be prepared. Yeah, fantastic. Love it. Brilliant. Okay then, so let's move on. So I'm going to say what it is I want, and then you're going to either put D or C. Just type in D or C. So let's do sales first. Is it a debit or is it a credit? Fantastic. Well done, everybody. Brilliant. What about purchases then? Amazing. Okay, what about sales returns? Okay, we've got a couple saying credit, majority debit. So if sales is a credit, sales returns has got to be a debit. Okay, so if you can remember what your sales is and what your purchases is, sales returns and purchase returns will be the opposite. Okay, so if your purchases is a debit, your purchase returns has got to be a what? Fabulous. Excellent. It's got to be a credit. Okay, then what about cash? Physical cash, like petty cash. Brilliant. Cash can be nothing else but a debit. All right. Now, in your exam, do not let the examiner trip you up with this, okay? Cash is cash. You can either have no cash or some cash. You can never ever have negative cash to turn it to a credit, okay? No matter what, it's you've either got some or you've got nothing, okay? Okay, then what about bank? Samantha Jones, well done you. This is a bit of, oh, Darren, well done. Excellent. Yeah. So if it's a positive balance, so you've got money bank, it's going to be a debit. If it's overdrawn, which I definitely am at this time at month before payday, it's a credit. Okay. So it can be either. So if it's a positive, it is shown under current assets. If it's overdrawn, it's shown under current liabilities. Okay. So if it's an overdraft, yeah, excellent. What about money that we owe to HMRC? Fabulous. Oh, you're on the ball, you lot, tonight. Well done. What about your receivables ledger control then? Excellent. It's a debit because it's a current asset. So this is somebody that owes the company money. Okay, so trade receivables is what we call the receivable from the receivables ledger control account. So it's making sure that you understand the difference, because when it comes to doing final accounts, a silly thing like you put in receivables and payables ledger wrong way around can really throw your accounts out, and you can spend hours looking for it, and it's such a simple error that's happened. What about payables ledger control then? Excellent. What about rent and rates? So rent and rates, office expenses and wages. Excellent. They're all debits because they're all expenses, and expenses are shown on statement of profit and loss, which will go down when you do your level, when we do level 3 bookkeeping. What about office equipment then? Excellent. It's a debit. It's a non-current asset. It lasts longer than a year, so it becomes a non-current asset. What about equity? This is a different word for capital. Equity is used a lot at level 4. Yeah, perfect. Credit. About a bank loan then. This is a long-term bank loan. Perfect. It's a credit, and if it's long-term, it's a non-current liability. If it's short-term, it's a current liability, but short-term needs to be within a year. So anybody that's moving on with the studies, for instance, if you've got an exam paper and it says you've got a bank loan that's going to be repayable within the next year, it comes out of non-current liabilities and goes into current liabilities. Okay, so that's just a trick for you to remember as we're good at later down, as you're good at later down your studies. About drawings. Excellent here. And what about a motor vehicle? So this is one that's used within the business. Fabulous. You lot are amazing. How many of you sit at home and think, oh God, I can't get my debits and my credits? Yeah, and then you've just done that. So that is the grounding that you want. All right, and I'm going to take it a little bit further tonight. But if you've got that grounding, you're doing really, really well. So any of you that's answered questions tonight and you've sat before you came on and you're like, oh, I'm rubbish at double entry, I don't get it. You do your little fibbers because I've just seen what you've done. So that's really good. Really, really good. Okay then, so I want to just go over balancing off accounts or drawings classed as an expense. They are similar to an expense, yeah, but they're not shown on profit and loss, because what happens is as you go along with your studies, if you get up to level 4 and you decide to do personal tax as an option, for instance, you'll realise what we have to do with drawings when we do somebody's accounts. Because if you take the drawings off as an expense, they're not paying tax on it. So what we do is it's shown separately because we have to ignore it for tax purposes. Okay, so it gets a bit complicated, but that's when nitty-grittier accounts come in. That's the bit that I love. Okay then, so I want to talk about balancing off accounts. Now, this is really crucial in exams. And when I said to you RTFQ, I mean read the flipping question, okay? Because what happens is you can go through books. I'm going to explain to you what I'm trying to get at in a minute, but you can go through books and you can say, said you could do that in books. But when you're in an exam, it will specifically tell you what you've got to do. And if it says you've got to balance off all the accounts, it means you've got to balance them off correctly. Okay? So when I say RTFQ, I mean read the flipping question, because you will lose valuable marks if you don't do that. Okay? So to balance off an account, remember that you've always got to balance off the totals to total each other, and it's always got to be the highest side. So what we've got here is we've got the debit side of the bank account, that's the highest. So that figure is going to go on to both sides. Okay? Then what you're going to do is you're going to work out what the balance carried down figure is. So the balance carried down goes on the lowest side. And that's always balance carried down at the end of the month. Okay. Now what you've got to do is you've got to bring that down. So I always remembered that you're bringing down baby. So it's as though you're going down steps. So you're bringing it below the total on the opposite side. And that's always dated the 1st of the next month. Okay. Remember, these are main ledger accounts that we're doing tonight. I'm not worried about the subsidiary ledgers or memorandum ledgers. I need you to understand how to balance off, okay? Now, the examiners are very, very good at tripping you up, okay? So if the examiner says, what side is the balance carried down, you're looking at this figure on the credit side, okay? Really important that. Because the amount of people that would put debit and this is balance is not asked for that, or she's not asked for it. She said, or he said, what side would the balance carried down be and what's the amount? So don't automatically think they're looking at what's going to be brought down into next month. And I've seen thousands of students lose marks on that. Okay, and not just AAT students, I mean different qualifications that I mark on. So really, really read what the examiner's asking, okay? You've got plenty of time to do this exam as long as you go through it step by step. Okay then, the next way you can balance off an account. So for instance, the capital account's only got one transaction in, okay? And in real world, this is what we do, okay? All we do is we double underline it because it's staying on that side because there's nowhere else. So if you've carried it down and brought it down, it's still on the same side. So all we've done is double underline it. I think it does show you in our books that is an acceptable way of doing it, but the AAT may ask you to fully balance off the accounts. So if they do, based on the capital account, what they want you to do is total up the highest side, then do your balance carried down, and then bring the balance down at the end at the beginning of the next month. Okay, now that's really important. You might understand how to do balancing off and what have you, but I know we're training to be accountants or bookkeepers, and we don't like reading question. So you might know how to balance it off, but you might not read question properly as well. So is everybody okay with that? Do you understand what it is I'm saying? Fantastic. Yeah, perfect. So, like I say, it's easy marks to pick up, but it's easier marks to drop as well. So just be careful. Okay then, so I want to just go through some examples of double entry. Okay, so this one's straightforward. I'm not using a cash book tonight. We're using a cash account. We'll have a look at cash books tomorrow when I do bank reconciliation. Okay, so when you're posting a transaction, yeah, your debits and credits have always got to balance. All right. If they don't balance, you've done something wrong. Okay. So based on this, we've sold goods on 31st of July 23 for cash, 240 including VAT. Okay. What's the VAT amount on that? Or just checking myself then. Okay, so we've got a few different answers coming in. The VAT amount is 40. So if it says it's including VAT, the easiest way to work it out is 240 divided by 6, which equals 40. That is the VAT amount. If it's including VAT, you've got to take out a sixth of it, because you've basically done 100% plus an additional 20. So for including VAT, divide it by 6 gives you 40. All right, that's the quickest way to do it, as long as it includes VAT. Okay, so the double entry then. So what we're going to do is we're going to put the money into the cash account. Okay, so we've got 240 going into cash account. Then we're going to credit the sales, because sales tells us that sales is a credit, but it's the net amount of sales that's a credit. So we're going to put 200 is a credit in sales, and then we're going to put the 40 in the VAT account. Okay, and now you can see that the cash debit side and the credit side both balance. Okay, so if we did a close accounts off then and did a trial balance, we'd see cash account, sales, VAT, and debit and credit balance. Okay, and that's what you're wanting. You're wanting to make sure that it does balance. Okay, everybody okay with that? And everybody okay with the VAT? That's really important, that VAT. Yeah, fabulous. Okay then, so let's move on. Let's do a cash purchase then. So bought goods for resale. So that's important. I bought goods for resale. That tells me that this is a purchase of £120 including VAT. So how much is the VAT? Excellent. Look at you lot. You are good listeners. Fantastic. Okay. So what we're going to do now is the money's coming out of the bank. So we're going to credit the bank account. Pearls tells us that purchases is a debit, the net amount. So if purchases is a debit, the VAT on the purchases is going to be a debit. Okay. And the reason why it's a debit is purchases is basically an expense to business because we're buying stuff to resell. And the VAT is what we're going to claim back from HMRC, and we're going to net it off against our output VAT, which is our sales VAT. Okay, so that's why we do it. Okay, right, let's move on then and look at something a bit different. So what we've got here then is I've got my cash account, I've got my sales account, I've got my VAT account, my bank account, and my purchases account. Okay, so I'm going to balance off my VAT account because in my VAT account I've got the cash sales VAT and I've got the bank account VAT, the purchases that we've bought. Okay, so I want to balance it off, so I'm going to balance it off to the highest side, and then I'm going to get my balance carried down and my balance brought down. Okay, so I've basically closed off that account. Now what I want to do is I want to do a trial balance. I want to see that my debits and my credits equal each other. Okay, so you're going to use the figures that are shown on screen. So cash is 240, sales 200. I've got 20 quid credit on my VAT account. I've got my bank account of 120, and I've got my purchases of 100. Okay, so I'm just going to put together a little trial balance just to show you how it's going to start. So all we're doing is we're putting in them closing figures to make sure that both sides balance. Okay, because as you move on to if you're on introduction to bookkeeping, for instance, you'll just be learning all this. When you go on to the ones that is principles of bookkeeping controls, I think it's called off the top of my head, you start looking at errors in the account, so and how when we use a suspense account and how we rectify errors and how we use the trial balance to see if the errors are what we call an error that you can identify from trial balance or not, because certain errors won't be shown on trial balance, so it'll make the trial balance look correct, but there could be errors within it. So but that's a nice one for you to come on to. I think Helen is covering some of that on Thursday night. Okay then, so I'm just going to move on and we're going to do a bit of a bigger example. Now this is only an extract from the day books, okay, because otherwise I'd have massive screens. So remember, your day books are your sales day books, and that records all your invoices to credit customers. Okay, now what the examiner likes you to do, they like to chuck in about cash sales, and they expect you to either put it into sales day book or record something in trade receivables control account, because that's a way of tripping you up. Okay, so just be careful if it says cash sales or cash purchases, yeah, it doesn't go in the day books, okay, and it's not recorded in the control accounts. Okay, so looking at the day book then, so the total of the day book, and you're always working on totals with this one. So when you're doing your assignments for Premier, when you come to enter these in the main ledger account, so your sales accounts, etc., you're using the totals at bottom of the day book. When you enter them into the customers accounts, you're doing them individually. Okay, now remember, in the day books, unless it states in the exam, you use the end of the month, okay, the last day of the month. Now people tend to struggle with this, you know, there's how many days there is in a month, you know, there's 30 days of September, April, June and November. All the rest have 31 except February, which has 28, 29 on a leap year. So just try and remember June. I think, you know, I've remembered that from being at school, but just try and remember how many days are in a month, because if you've got to put it at end of month and you put 30th and it's 31st, you could lose marks on that. Or you can use your knuckles. So each knuckle has 31. So January is 31. February middle is obviously 28 or 29. March 31. April 30. May 31. So just do it that way. It's cool. Quite good way of remembering, really. Okay then, so let's post these in. Okay, so we've got sales of clothes. Okay, the net amount is credited. Sales of fabric is credited. The VAT is credited. Okay, so if they're all credits, you should now know that the opposite has got to be a debit, because otherwise the account doesn't balance. Okay, that's all you need to be able to do. You've got to think about it logically. Accounting is not difficult, I promise you, because if it were, I wouldn't be sat here doing it. All right, because I'm not academic at all, but I am logical. So if we're saying that the accounts have got to balance, if you've got your credits, your debits have got to balance. Okay, so what numbers are you going to put in to get it to balance? Okay, let's have a look then at purchase daybook and purchase returns daybook. So the VAT account that's highlighted, that's because we've just posted the VAT. So don't forget, you'd only ever have one VAT account. So everything goes into one VAT account. So let's have a look then. So we've got purchases. So we've got net purchases is a debit. The VAT on the purchase from the purchase daybook is a debit, which means that the total in the control account has got to be a credit. It's a credit because it's a liability. You owe that money to those suppliers. Okay, so it's important that you understand how it's set out in account. So that is a liability, it's a credit entry. Okay, so then your daybook, your returns daybook has got to be the opposite. Okay, so the net amount would be credited in the purchase returns daybook. The VAT will be credited in the VAT account, and the total will be debited in the payables ledger control account. Okay, now in your exam, remember that we don't credit the purchases account the returns. Okay, they will have a separate account for it. It will allow you to pick purchases account, but you've just got to remember that it'll have a separate account unless the examiner says everything's put into purchases account, but I've not seen that. Okay, so it will go into a separate account. Okay, is everybody okay so far before I move on to the next bit? Yeah, brilliant. Okay, fantastic. Okay then, so just going to balance these accounts off for time being, especially the VAT account at this point. So again, total up your highest side, then work out the carried down figure to work out the brought down. All right, and that's all I'm going to do with that one. Now I want to move on and have a look at some additional information. Okay then, so what we've got here now is we've got some money that we're invested into bank, which we've put in on 1st of August as capital. Now, I changed that, and I'm going to be honest with you, I changed that earlier because I'd put that as a balance brought down figure, but then the trial balance wouldn't balance because you'd have either had to realise that it were capital or you'd open a suspense account. So I thought, listen, we'll not get into that tonight. But it made me realise, even though I've got, 35 years of experience in accounting, and I've had my own practice for over 25 years, you still, when you're doing things like this, it still can blow your brain. So it gets you thinking. So writing this PowerPoint, it was like, why don't I balance? And then I realised. Okay, so I just want to say, even us that have got experience can make mistakes at times, or testers knowledge. That's better. Testers knowledge, not make mistakes. Okay then, so what we've got now is we've got a customer, a credit customer has paid us. All right. So if they've paid us, that means that we're going to put some money in bank. So it's going to increase our asset, our current asset, which is a bank account. But it's also going to decrease our current asset, which is our trade receivables account. Okay. So our receivables ledger control account. So what we're going to do is we're going to put, £675 into the bank, and then I'm going to credit the receivables ledger control account. Okay. The next one, we've got a payment from a credit supplier, so that credits the bank account, and I'm going to debit the payables ledger control account, and that reduces then the liability. So it reduces an asset account because the bank account's an asset account because it's got money in it. So the decrease in the asset account, but it also decreases a liability because we've now paid our credit supplier. Okay. So you know these exam questions where you've got to show what it's done to an account. That's the way you've got to think about it. Where's it going, and where would the account actually be? So if there's money in bank, it's an asset. So we're reducing the asset account, we're reducing the liability. Rent paid, I'm ignoring that on these. Rent paid of 600. So what I'm doing is I'm crediting my bank account. So I'm reducing my current asset, my bank account, and I'm increasing my expense account because rent is an expense. Okay. Then I've got my office expenses of 250. Again, I'm reducing my current asset, my bank account, and I'm increasing my expense account. Okay. Everybody okay with that? I'm just going to balance them off now so that we can see how trial balance does. Yep, perfect. Okay. So all I'm going to do now is I'm going to balance off the bank account. Okay, so the highest side was the debit, and then we've got as balance carried down and balance brought down. Then I'm going to do the same with receivables ledger. It's good to practice this because the examiner likes to test this. Okay, then we've got the payables ledger, and then I'm going to leave the others because I could just double underline it, but I'm not going to bother balancing them off because we know that that's all that's in it. Okay then. So what we've got to do now is we've got to go on and do the trial balance. Okay. Now, there's two ways of doing this in an exam to see if you've got it right. You could add up all the amounts, everything in the amount column, and then divide it by 2. That tells you what should be on each side of the debit and credit. Okay. So if you know all those figures in the amount column are correct because you followed your double entry, yeah, you could just add them up, divide it by 2, and then you know what your debit and credit could be. Or you just take potluck, you use your pearls and your dead click, and you use your knowledge to get you through it. Okay, so this is only a simple step-by-step double entry to trial balance to show you how it all comes together. So what we've got is we've got sales of clothes. So if you think back to your pearls, but also think back to accounts we've done, what side's that going to be on? Brilliant. Credit. So what about your sales of fabrics? Fabulous. Purchases. Brilliant. Purchase returns. Fab. Receivables ledger control. Fantastic, because it's an asset. Payables ledger control. Brilliant. VAT owing. So we owe it HMRC. Fantastic. bank account. Brilliant. Yeah, it were a debit. We've got money in it, so it's asset. Rent. Fantastic. Office expenses. Brill. And capital. Fab. Okay, so if you add up now your debits and credits, what you've actually got is a trial balance that balances. Okay. Now, that's the knowledge you need to have to then be able to go on and start completing financial statements. Okay. So I might have took it back to basics, but I've took it back to basics so you can see it step by step what happens in the general ledger accounts, the main ledger accounts. Okay. Because remember, Tom Jones, Fred Bloggs, Barney Rubble, etc., they are customers and suppliers. They are not part of the double entry. They are what we call memorandum accounts. So their accounts equal the receivables ledger control and the payables ledger control, the total of them. Okay. So what you've got to understand is it's the general ledger accounts that you're dealing with in your trial balance to enable you to move on to do the financial statements. Okay? It's really important that, and it's really important that you read the questions. All right. Will we be looking at individual trade accounts? We can add that to it, because normally what happens is with individual trade accounts, the way you've got to look at it is whatever side it goes on. Let me go back to control accounts. Whatever side it goes on in this control account, it goes on that side in their account. Okay. So what you've got to understand is that if you are entering in all your purchase invoices from your purchase day book, yeah, you know that your purchase day book is a credit in the control account. So in the individual's accounts, it's got to be a credit in their account. Now, the difference with the control accounts to the individual accounts, yeah, you must enter them in date order and as individual transactions. So what you're doing is you're not entering them at end of the month. You're using the transaction date. So if it says the invoices is the 1st of August, in their account, it's the 1st of August. All right. And I've seen students lose marks for that, because what they do is they try and lump them all together, put 31st of August in, and that's it. It's wrong, because if you were working for, I don't know, a manager that says, oh, give me Fred Bloggs' account, I want to see all his invoices, his returns, his payments, etc., his credit notes, all that, and you've lumped them all together, you've got no financial information. Okay, it's absolutely pointless. So their individual accounts are in date order and has got every transaction in it that relates to that particular person. Okay, so I can, if anybody wants me to go through that, I can do that first tomorrow night before we go on to bank rec. Oh, it makes sense. Good. Sometimes, Darren, it makes sense just to have a chat, or for me to do things like this, because I call it simple Sam's terms, because I can't explain it in any other way. Okay, guys. So has anybody got any question? My time is your time for time being. Any question at all? There's no silly questions in here. Yeah, none at all. Unless I make it. Yeah, so is everybody happy with what's being covered tonight? Do you want me to go? Do you want us during this bookkeeping week? Is there anything specific tomorrow night I'm going to go through cash book, updating cash book, and bank reconciliation. So that will be tomorrow night. So okay, so that's my email address. Any questions, if you don't want to ask on here, or you want to ask us to cover anything else or whatever, just drop me an email. Will we see some exam style questions? So what happens with them, Darren, is because this is just a general bookkeeping week, all we're doing is we're giving you some knowledge. We have got when I've done the recordings for bookkeeping transactions and the other one, we've actually gone through exam questions. Correcting journals is on Thursday, so there'll be suspense accounting journals on Thursday. So anybody, if you're getting ready for an exam, don't forget I've got loads of recordings that I've already done that takes you through all the assignments. So I've gone through all the book in lessons. So I think there's 3 lessons and 1 practice lesson. So they're all on your My PTA account. So the lessons are there. If you don't like reading, which I don't, if you want to watch the lessons, they're all there already. All this is to keep you studying, to get you to ask us questions, and just to keep us involved with you, because when you are like self-studying or distance learning, sometimes you feel on your own, and doing things like this is just to let you know that we are here, we do care, we are human, and we want to help you. So please don't think you're on your own. There's tons and tons of material available. This is just an additional thing that we're doing just out of love and generosity, because we like to still be involved with you all, even though you're distance learning. So anybody got any more questions before we end this evening? Thanks, it's been really useful. I've already lost this. Yeah. So honest to God, Sarah, just keep thinking about it. You carried down is always above. You bring baby down below. So your brought down's always below. Okay, so it's always below that line, below that total. And it's just silly things like that you have to remember. I made some, when I was doing my AAT many years ago, I made up some right stories to remember things. And it don't matter what they are, as long as it helps you remember. Okay. Any other questions? Anything you want me to go through? Anything that you want me to add tomorrow night? Please give me some warning, because I don't want to log on. I've already wrote presentations, so if there's anything else, I'm more than happy to add to it tomorrow. Now everybody's happy. Okay, if you do think of anything, please drop me an email, because I'll be logging on early morning anyway, so it gives me time to crack on. But I hope it has helped you, and thank you. So there's so many of you on tonight. It's lovely to have you on board, and I recognise quite a few at names, and I think you're all doing fantastic. And anything else you need, you know where we are. So have a good night, and hopefully I'll see some of you again tomorrow. You're very, very welcome, everybody. It's been a pleasure. No worries. Thanks, everybody, and have a good night, and take care, and speak to you tomorrow.